If you've clicked on this video, you want to know a little bit more about the ICT Silver Bullet. We're going to go through when it works, when it doesn't, but more importantly, I'm going to give you guys entry models that I've personally used to become profitable to trade this model. Nice and simple, let's get into it. Now I'm going to pose the question to you guys. Which entry model do you think is better? Is it better to have a sweep liquidity, a market structure shift, and enter off a fair value gap? Or is it better to have a sweep liquidity, a shift in structure, and enter off an inversion fair value gap lower down in the move? Give yourself 5 seconds, pause this video, and then I'll get into the answer. I think a crucial thing to do is to explore the pros and cons. And I don't want to give away the answer, but ultimately there's pros and cons to both. So let's unpack both examples. Number one, you have the sweep liquidity, you have a market structure shift, that's your shift in structure, and then you return to this fair value gap. The typical ICT 2022 entry model for Silver Bullet, it suggests that you do this, and you enter short from here, your stock goes above that swing high, and let's just assume for the case of this video, you're targeting a 1 to 1.5. You can see you hit that pretty quickly. The risk in this situation is that you don't have as much confirmation as if you were to enter in this situation or this position. In this position, yes, you're entering lower down the move. However, by this point in time, you have multiple stacked PDRAs lining up to make sure that what you're actually looking at highest in terms of probability. And that is a compromise that you're gonna have to consider for yourself. Do you want a higher risk trade that completes quicker? Or do you want more confirmations, which might lead you to be a little bit late and maybe you might have to take a smaller risk to reward? So going back to this question again and ask yourself the same question. Which of these entry models is better? And hopefully you've come to the conclusion that neither is better. Now in saying that, one is not right and one is not wrong. It's going to depend on your trading style, but what would I prefer? What did I do? What did I do yesterday with the Discord? I called out this trade from here, from this inversion gap, and I want a price to move lower, a 1 to 1.5, cruisy, happy days. By this point, guys, what you can actually see is we closed below this green candle. That indicates a change in the state of delivery. It's also an order block. And when we continually do that, that is indicating bearish price action. Yes, we've returned to this sell slot imbalance. Yes, we've got the 2022 model playing out. Beautiful. However, now I've got order blocks. Now I've got changes in the state of delivery. Now I've got more. And we've now inverted this massive bullish fair value gap. For me, I have everything I need paired with the high time frame, which we'll get into just a second, about why I'm going to enter this trade and why it's high probability. One of the easiest ways to get a high time frame backing and to ensure that you've got the highest chance of a reversal as opposed to a continuation, use the optimal trade entry. So as you can see on the screen here, I've marked out the same trade, I've marked out the previous range, and I've marked out 0, 1, and that blue line and the other blue line, that represents the optimal trade entry. And this is where you're looking for price to dig back into before reversing. Now our trade that we're talking about is all the way over here. It's very small, and the range that we're going to use the Fibonacci on is from this swing high to this swing low. From the swing high up here to the swing low, extend that across. Are we in optimal trade entry here when we're looking for a short? Yes. So the whole philosophy here is that the price has trickled back up into optimal trade entry. That is the higher time frame backing, and that is using market structure from a higher time frame, from a bigger price swing. So I'm not just using the 1 minute time frame and saying, oh yeah, we're going to enter off any inversion just because it's a silver bullet. No, you're going to get wrecked doing that. We're using a high time frame backing, and you could create a rule for yourself, and you could say to yourself, I'm only going to enter short if we're in optimal trade entry. All I'm trying to say here, guys, is the reason why you might keep getting wrecked for silver bullet trades is you're not using anything on the high time frame. You're just using simply any market structure shift, any sweep liquidity, and any fair value gap return. These numbers are important and they take you through the process. It's kind of like you're putting a puzzle together, and all these 5 things complete that puzzle. Number 1, you've got a high time frame market structure, which is that optimal trade entry. Number 2 is you have an internal sweep liquidity. So the high time frame is the market structure here. The internal structure where you're looking for confirmations is on the 1 minute time frame. And again, you're looking for a sweep liquidity, a shift in structure, and all these other things added up lead to a really good entry. You should understand and you should know, write this down, you should know before you enter your trade, where is the drawn liquidity or where the drawn liquidity is for you. You should not enter a trade without a draw. It's an important point to actually execute a trade with a clear drawn liquidity. A lot of people, they see all these confirmations, they forget number 1, forget about that. They see a sweep, they see a market structure shift. Oh, beautiful, it's 10:30, we're in silver bullet. We return to the fair value gap and then price just keeps going higher. Why? Because there's not any high time frame backing and you haven't made sure that there's a clear draw liquidity. What's a clear draw? I've got many videos on that about low resistance liquidity, trendline liquidity. Check those out, search my channel. But ultimately you can see we've got relative equal lows, price moves quite quickly to those lows. Now, sometimes you only have one option. In the situation here, if I'm looking for shorts, say I'm looking for shorts right in the center, right here. Do I really have an option to get a return to a fair value gap? I've got the shift in structure. I'm in Silver Bullet. So the only option I have here is to use an inversion. And this is why I swapped from the typical 2022 model to being flexible and open to entering just off the inversion fair value gap. And it's really important to have that flexibility when all the other conditions are met. Now, taking a look at the charts here, guys, I've outlined all the elements you need for a successful trade. Number one, we've got optimal trade entry from this swing high to this swing low. Price pulls back into that and rejects from that area, number one. Number two, we have this stalling in price, and then you have this really nice inversion fair value gap. That becomes an entry, stop goes above the high, TP down here. Happy days, quite simple. 1 to 1, 1 to 1.5, you can see then we start to sell off. Let me show you another example from the same week, just last week, where a similar thing happened. We had SMT at the highs, we had an inversion fair value gap, however, we did not return to that civvy. Take a look at this picture here and see if you can find the short opportunities and long opportunities. Now I'm going to give it away. The short opportunity doesn't return to a fair value gap, but the long opportunity does. And what you should be able to see here is that the way you can enter during Silver Bullet is so vast, it's so flexible, but you got to choose what models and what entries you like. That's really important. Let's get into both here. Let's dive into the charts. And this is something that I guarantee you've been caught out on before. If you've traded the Silver Bullet model, the typical rate of liquidity, market structure shift, I guarantee you most people that are new, that are learning, are going to enter when price returns back into this fair value gap. And I used to do the same thing, don't worry. However, what I've realized now is that you can make just as much and be just as consistent playing the range and using optimal trade entry. And let me explain what I mean. So we do have this sweep liquidity, we do have this shift in structure, but I want to see price immediately return to that fair value gap. Write that down. I don't want to wait for price to dig back down here and then return. Why? Because if I'm wrong and price is just digging back down to sweep liquidity, price obviously is going to continue. So the best situation for Silver Bullet, the best time to actually use the typical model, if you had a shift in structure here and then price returned here, that is the best time to do it. Not when price is dug all the way back down. And these situations here where I prefer to use this inversion fair value gap, this bullish gap is inverted, that becomes the entry goes short, your stop goes above these bodies, you target this sell side. Here's an entry model for you, and it's using SMT, macros, and inversion fair value gaps, using this direct trade that we we're just talking about. The best thing about these situations, guys, is that we know that the NASDAQ, which is on the left-hand side here, and ES, which is on the right-hand side, normally they move together. However, looking at the left and the right, we can see that the NASDAQ is making higher highs, and the ES chart on the right-hand side is making lower highs. That is what SMT is, and that paired with a macro can indicate a reversal. All you're waiting for then is that inversion fair value gap, making sure you've got a clear draw on liquidity, you enter the trade, take the trade short, happy days. Now we've talked about the short opportunities from here, but what about the long opportunities from right here? Can you pick all the confirmations, all the PDRAs that you could use to enter? Can you see the typical 2022 model? Can you see that? Can you see an inversion fair value gap, maybe a change in the state delivery? Let's get into the charts, let's have a look together. Now, as you guys might know, the concepts of ICT are fractal. OT is fractal. You can use it on the 15-minute chart, the 1-minute chart, smaller ranges, big ranges, and same with any other PD array. So if we were to mark out a range, for example, from this swing low to this swing high, you can see that after that first trade ID, price digs back down into a level of discount, into optimal trade entry. In that spot, we also sweep liquidity. We are still in the Silver Bullet session, right? So we sweep liquidity, we have this inversion fair value gap right here. That's marked out nicely. But what else do we have? If I just zoom in here, do we have a market structure shift? Do we have a return into a bullish fair value gap? And the answer is yes. You've got an inversion fair value gap here. You've got a bullish fair value gap here. And there are some situations where you have the option to enter from both. However, in some situations you won't. And this is what a lot of people don't tell you. They talk about the 2022 model, they talk about Silver Bullet, but they don't explain the fact that you won't always get the entry you need, and therefore you need to have many ways to get into a trade following the same structure. We come back down, we sweep sell side. We tap into this bullish fair value gap. Price reacts back up quite aggressively. We close above this down close candle and above this swing high. That there is your market structure shift when this candle closes above. When price trades back down in, you could enter long. When price closes up here, you can enter long. But can you start to see now that there are so many ways to enter a position? You just have to choose what PDRAs you prefer to use and then forward test and collect data on that. Could I enter long from this inversion with my stop beneath these bodies? Yes. Could I enter long from the return into this fair value gap here with my stop below these bodies? Yes. Could I enter long when we close above these set of down close candles like this, and that forms an order block with my stop now below this swing low? Yes. There's no invalid way to enter a trade. It all comes down to what has happened prior to your entry. Have we tapped into optimal trade entry? Have we swept liquidity? Are we in a macro? Are we in a bigger time frame optimal trade entry? These are the things that should guide your trade, and then look on the 1 minute time frame to get the entry confirmations. To conclude this video, I want you to look at this chart. I've marked out the smooth buy side, but I want you to look at all the PD arrays that you can use, all the confirmations that you could use to enter the position to move to the upside. The opportunities are endless, guys. Are you always going to have winning trades with this model or any model? The answer is no. However, if you collect enough data, you're going to gain more confidence to execute trades even after losing one, and you'll find better opportunities to enter the market. All these opportunities here, all these entry models, inversions, bullish fair value gaps, returns, they yield the same result, but you're just using different PD arrays. And notice here, you can use the macro, you can enter outside of the macro, up to you guys. If you've watched to the end of this video, guys, I appreciate all the support. And again, check out my free Discord. The link is in the description of this video. Until next time, guys, I'll talk to you then. Peace.